Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, May 8th, 2019. So the market was pretty much all over the place today. Futures were down pretty hard. From there, we rallied up to the exact amount that they were down. So they went from the S&P went from down 12 to up 12 to finishing down 4 when everything was said and done. So it was around the world and back again with a little bit of, closed the day read a little bit. So I apologize about getting Woody's comment out late. Had no idea that he had put it on the Skype. That's how we give our notes back and forth to each other, and I was not alerted about it. So he sent that out at about 10:30, I think it was, and I didn't notice it until 3:30. But anyway, let's just go over a few things here. So sentiment after yesterday's big move, 8%, and the profile still allows for some bounces into the ideal final topping zone. He says how stocks bounce from here will tell everyone what their condition is and better defines the breakdown zone, which is in fact approaching. Stocks are on borrowed time, and I am watching everything very carefully and wait for a defined setup. So that makes sense. Everything that he said on that, and he'll probably go over and over that more in with our report tomorrow. Now in the morning notes, I had said that the futures were down, and that if we saw new lows, that it would be setting up some bullish divergences. So I would not get aggressive on the short side from these levels. Just wait and see if they bounce. Now with the S&P, I said I gave the range, which if the bulls were able to push the S&P above the 28.85, that there was going to be a reaction trade up to the 28.98, and if they got above 28.98, then they're probably going to try for the 29.18. So S&P made it right up to the 28.97, and that was the top. And then from there, I believe that's when it was up some 14 points or something like that. And then once we hit that spot, we ended up going straight down from there to where we closed for the day down 4. So let's go over the charts and take a look at things. And here is our defined area. So this isn't the big defined area that Woody's talking about. This is just short term here. So the bears, they need to get it through 28.61. For that, I'm anticipating that they're going to come down, close the gap. There's also a gap down at the 28.16. So these would be the targets if the bears can push through this level. It would be anywhere from the 28.36 down to the 28.17. We don't have any bullish divergences in place, so that is just leaving the door open that we do come down to these levels. And if we come down to the 28.16, most likely they're going to come down to the 28.10, just because it's a fib retracement. There's support from these levels, so that would make sense. Now the bulls, they need to get it above the 28.96 area. If they do that, there's going to be a reaction trade up to our retail moving average, which is going to be right around that 29.13 level. So that's, if the bulls get above here, expect to see 29.13, possibly even a little bit higher than that, 29.16. If the bears get it through here, then we look for the closing of the gap at the 28.35 and possibly closing of the gap at the 28.17 or 28.10. When we get down, if we get down to these levels here, I would not be aggressive on the short side with new positions. Managed positions, and again, what I put in the morning notes was that you can use a trade above the 29.19, I think it was. Let me take a look at what we put here. 29.19 would be the stop. So it gives you a little bit of room to let things play out. New positions, if you're looking short, you simply would use a break of the 28.62 level, and you would put your stop about the 28.95. So it's a little bit of a big range on that, but that would be the sell trigger. And again, if we get it, I believe we're going to see some bullish divergences. So I wouldn't get aggressive with new positions. I think I would more just manage positions from the 29.42. If we start seeing these gaps, maybe scale out a little bit. I'm going to leave that totally up to you on how you want to manage your trades. But right now, the bulls need to get it above the 28.94 to get up to the 28.13-14 area. Bears need to get it down, get it below the 28.62. From there, keep an eye on this 28.35 and then the 28.13. Taking a look at the 15-minute chart, you can see that We almost had some bearish divergences. If they came up here and took these highs out, we actually would have had bearish divergences. Now, this actually, wave structure wise, the pattern that I would look at would be 1, 2, 1, 2, 3, and now this is our wave 4. And if we came down and made a wave 5, that would only be wave 5 of 3. That would then look for another bounce back up to this level here, to 28.97, where we would come up. That would be our larger wave 4, and then we would make a wave 5 down. Again, not my big, say, strong point of technical. I do know your Elliott waves, but the little minor moves here and there, I don't know the squiggles. I do, but I just don't have the patience to label them. So in any case, if we come down and it finds support someplace, let's say we move below here and it finds support 28.49, or let's just say down at the 28.37. That would open up the door for another rally back up to the 28.62 and even up to the 28.97. And if it gets held down and we go down again, that would be where we'll be looking to buy. Someplace down at these levels, I would close shorts, wait for a buy trigger, and from there, that's when I would expect to move back up to test a 29.50, which would bring us right into the into that kill zone. From there, everybody will be extremely bullish on the market, and that will be when we get the collapse. And when that happens, I really do anticipate this is going to be the move after that. So let's see what plays out tomorrow. The range is pretty defined, so you guys can just manage your trades that way. It would really, I wouldn't be too stuck on my wave structures that I'm trying to point out on this. Just use, the stops and let things go where they're going. I like I said, the minor little wave structures are not my strong point on things. So right now I'm looking at this as a wave 3 down, wave 4, and wave 5. But if it ends up going up, this, it could be, just some type of ABC. We got the move that we're anticipating for the short term. If it extends lower, it would make even more sense where we come down to one of these levels. But like I said, right at this particular point, I wouldn't get aggressive on the short side, and I'd be a little careful, as a matter of fact, and just manage the trades with stops. So with that, have a great night, and I'll talk to you guys tomorrow.